Will Paladin Energy absolutely skyrocket in the coming years? We're going to dive deep into the financial health of this company to see if it's well positioned for massive, potentially life-changing returns in the future. To start, it's a uranium miner. It's already profiting on the uranium it's producing. This is kind of rare for a mining company. They became a full-fledged producer. They're earning 27 cents a share, and their price per share is now 34 times that earnings. So the reason why the price to earning ratio matters is because it measures how many years it would take as an owner of the company to earn back your investment. It would take 34 years to earn back your investment. That's definitely not a way you want to be looking at these companies. And the reason for that is because their earning per share next year is going to be even higher, right? So it's always changing, always fluctuating. What matters is the market cap increasing. Will the market cap increase? Currently $2.75 billion to buy the entire company. Now let's look at their financials, right? Are they drowning in debt? Are they swimming in assets? We know they're already profiting, but are they financially healthy to begin with, right? Total assets, $622 million. Total liabilities, $224 million. The net of those is almost $400 million. They have net assets of $400 million. This does not include all the future cash flows generated from their mines. And we're going to go into exactly how massive these mines are. But this speaks to just currently a snapshot of where they are as of June 30, 2024, the last time we got a balance sheet. So they have current assets, meaning assets they could liquidate within a year of $199 million. They have current liabilities of $50 million. So the net of that is $150 million of assets they can liquidate, and they're already generating revenues to continue their operations. So far, a very healthy company. Now the question is, how big is their mine, right? How much growth is ahead for this asset? Well, this is a look at the company, right? They have a Michelin Advanced Exploration project up in Canada, and then in Namibia they have the Langer Heinrich mine. Let's take a look at the Langer Heinrich mine because that's the big beast of this company, right? In 2025, they're expecting to produce 4 million pounds of uranium. Round up, let's say $100 per pound, that's $400 million of revenue, right? Cost of production. This is where it gets crazy, right? 28 to $31 per pound. It cannot get lower than that. So for every pound of uranium they sell for $80, they only have to spend $28. So they're making $50 per pound. They are an extremely low cost producer. That is extremely positive. That's how they can be generating so much cash and profit already, right? Now, how big is this mine? Well, they're saying it has a 17-year mine life with nameplate capacity of 6 million pounds per year. That's 100 million pounds in total. So 100 million pounds times $100 is $10 billion in revenue. And so let's say if the uranium price never moved higher, right? Which every single expert realizes that we're in a multi-decade supply crunch. So the spot price of uranium has to go up. But let's just say it averages $100 per pound. They're still producing it at $30 per pound. So they're making $70 per pound. If they have 100 million pounds in the ground times 70, that's $7 billion of profit, right? That's how you can justify having an enormous market cap like 2.8 billion. This is a behemoth mine, and they're saying there's potential for mine life extension. So just right there, massive for Paladin, right? And these are the projections. Next year, 2025, analysts are projecting an average estimate of 63 cents per share. That would bring their price to earning down to like 11, which is extremely low. So this asset in and of itself, not including the acquisition they're about to do, this asset has just major upside, especially if the spot price of uranium can continue. But even if it doesn't, there's going to be kicking off cash flow with the ability to buy more companies, expand, become that next massive ExxonMobil. So this asset is in one of the best positions to take advantage of the imminent nuclear renaissance. Then they want to buy fission. Right? Now, Paladin's takeover of fission has yet to win shareholder support. This is as of August 29. It might not go through, but in July, Paladin agreed to buy the Canadian company for 1 billion Canadian dollars or 845 million US dollars. right? So what are they getting if they were to buy Fission Uranium Corp? Well, to start, Fission Uranium's balance sheet is pristine, right? Total assets, $450 million. Total liabilities, $5 million. So they're immediately getting like $450 million of assets, right? But that doesn't include the future cash flows, the future synergies. What does the company look like when these two assets combine? If Paladin and Fission combine, they would have 544 million total pounds, right? Cameco, which is a giant, Kazatomprom, which is a massive giant, the largest in the world, they have over 1 million. Paladin would be halfway there. What happens if they buy a deep yellow? Then they're there. Then they're a major, major, major asset. So we're still in the early stages, but this is how it looks. They would be the third largest mine on the planet with plenty of capital, plenty of cash flow to get their uranium out of the ground, to buy more companies and become that ExxonMobil that can 100x over years, over its lifetime, right? And kick off massive dividends in the future and in theory provide life-changing returns. Now, this is what the future looks like with the combined company, right? Patterson Lake South, that's the fission uranium mine that they would be acquiring, would set to start producing in 2029 and continue for 10 years. So that has a 10-year mine life. And then the Michelin mine, which is Paladin, would start on 2035. So they just have a huge pipeline of growth and cash flow, taking advantage of the future of the nuclear renaissance as it unfolds over the next few decades, right? So these are the statistics of the Patterson mine, the Patterson Lake mine that Fission has. 10-year mine life with a production target of 9 million pounds per year. That's 90 million pounds of uranium in the ground, shallow, high grade, large basement hosted deposit, shallow and high grade. That's how they're able to kick up 9 million pounds per year from this mine, indicating a low cost of production. And that's not including these other mines, they have early stage exploration mines, they have advanced exploration. It's not clear exactly what Fission's cost to produce is, but let's say it's $50 per pound and they're selling it for 100. That's $50 per pound of uranium times almost 100 million pounds is $5 billion. So it should be a multi-billion dollar company once they get it into production. Now, obviously, it will cost some money to get it into production. That's a fact, right? But as the prices fall in the sell-off of 2024, this asset gets cheaper and cheaper, well positioned to take advantage of the nuclear renaissance and provide life-changing returns over the next few years.